So the SGX Nifty has come off from its highs. It was up 65 points at one point and now it's up just about 25 odd points. Shubham Agarwal, who is the CEO and Head of Research at Quantsap Advisory, is here with us to give us some F&O cues. Shubham, hi, good morning. It's been a really rough, volatile last few days. So what is the expectation today and what are the stocks to trade?
Hi, good morning. First of all, if you look at the index data, one good thing about that is that even though we had a temporary correction on Nifty, but still the OI went down, which means that overall it was just a temporary long unwinding, which doesn't mean that it's a very negative structure. And even on the Bank Nifty, where the correction was deeper, still we saw that open interest did not rise too much, which is indicating that even Bank Nifty might find support after another 200 to 300 point correction. So it's an all buy list for me today. The first one is a buy on Tata Consumer. And if you look at the stock structure, the stock hit an all-time high sometime back, and post that there's a temporary correction that has been witnessed. And I believe that this correction is now coming to a apex, and there is a good possibility that we will see a rebound happening in the stock. So a 410 strike call option on Tata Consumer can be bought for a target of 11 rupees with a stop loss at 4. The second buy call will be on Berger Paint, and if you look at the paint as a sector, that has been showing some long additions in the derivative data, and especially Berger Paint, which has seen a breakout from the range yesterday. There's a good possibility we will see some more follow-up buying coming in. Now, because it is an expiry week, bull call spread, which is a low-cost strategy, can be initiated. The trade will be to buy a 530 strike call option and sell a 550 strike call option. The net cost of this spread is at 6 rupees 55 paise. We're looking for a target of 12 rupees with a stop loss at 3. And lastly, a buy call on Maruti. So Maruti, I guess tomorrow is the result. But even there, if we look at the structure, then we have some long additions that are being witnessed in the derivative data. So there's a good possibility that we might have a pre-result rally in Maruti. So a bull call spread can be initiated, where the trade will be to buy a 6100 strike call option and sell a 6200 strike call option. The net cost for the spread is at 33 rupees. We're looking for a target of 60 rupees with a stop loss at 15.
Okay. Thank you very much, Shubham, for giving us those trading strategies. Have a great trading day yourself. At the moment, the markets have opened with a green hue, and expectedly so. It's about 40 points higher, pretty much what the SGX Nifty was indicating, and a 0.25% higher on the Sensex. Reliance is starting with a big, bold print of 5% higher. Let's see how much it's able to retain once trading starts. Z is seeing some covering, I would assume. Tata Motors, SAIL, Indocent. Yeah.
Tech Mahindra is up 10%. I mean, I don't know if it will be 10% higher, but the street definitely likes the numbers, and IT as a space is doing well. So that's
fair point. Stock, yeah. Yep. Actually, a lot of finance at the moment is doing reasonably well. You know, you have Bajaj Finance, which is higher. Indocent Bank is higher. Today is their board meet when they will publicize the Route 1 investment, the amount of money that's probably coming, and what any other amount that they could be planning to raise via QIP or any other route. So Indocent Bank in the green, Axis is in the green, Bajaj Finserv, ICICI Bank are all starting in the green. But the index itself is just a bit sober. It's now just about a 0.25% higher, and I think some pressure is coming from actually IT stocks. Tech Mahindra is the only one which is in the green. The other IT stocks are seeing profit taking.
Even this Marico, you know, the numbers were better than expected. It was a big beat. Yesterday, during closing bell, it rallied. And I think in pre-opening also, Marico is well in the green right now, about 3% or so. So FMCG looking good.
Okay. Anuj, anything you're spotting?
You know, Lata, it's been a case study on Yes Bank. As we speak, there's no exit for those who could not do it on Friday, the FPO shares. And now another 10% down on that stock. So 11 rupee is what you have on Yes Bank. And this month it's down 57%. A lot of people thought that, you know, that it's a great arbitrage which is being presented. Nothing comes for free in the market, and the market always knows something. By the time the shares come into your account, the stock price is lower than that FPO price, and I think that's why, you know, you should stick to good quality stocks. I think keep an eye on stocks like Infosys, because it'll be interesting to see. By the way, BEL as well, post the numbers, will be reacting to numbers. But I think my sense is that going by the first take, the the test for the market would be whether this minor gap up that we get is actually a fodder for the bear, because after a long time we saw some bit of comeback by the bear yesterday.
Okay, Anuj, there is also